Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
In the second video today, guys, we will take a look at the Canadian dollar, because on the weekly research we have prepared the trading plan, the analysis, what really could happen. And right now, market has completed our first suggestion that it should show upward continuation, some first leg, after which some retracement could happen. As you know, ultimately we do not exclude the chance that market actually will proceed high and will take even this top. Because actually on the weekly chart we have the bullish grabber has been formed 2 weeks ago that suggests precisely taking out of this top. And also on the daily chart we already have discussed this concern a month ago. We have XOP target that has not been reached yet, that stands above this area. So this makes possible upward continuation. Also, all this stuff has the more valuable background based on the crude oil, because crude oil is coming to the major monthly target, closing of the gap on the monthly chart. After the reaching of this target, some really reasonable logical relief should happen, so retracement on the crude oil, and that really could push Canadian dollar higher. I mean, not the Canadian dollar per se, but this currency pair, this chart higher. Currently, guys, market has reached and completed the first leg to the upside, and we see first signs of the resistance. The market feels some pressure. This pressure is twofold. First of all, it comes from the dollar strength. So, as you know, recently the yields on United States Treasury bonds have increased significantly, and that really has pressed on all markets across the board. And the euro currency as well has dropped. Canadian dollar here has risen. Now market has reached the resistance. So you can see market stands at the weekly pivot resistance 1, this red line, our former neckline of this head and shoulders, and take as major 618 resistance 28.95. Also is a daily overbought here, so really solid resistance area. In the coming 2 sessions, we will get a lot of important issues. First of all, this will be European Central Bank meeting, as you know. But what's more important, this will be first quarter release of the gross domestic product in the United States. And currently, guys, there's really no real consensus on what numbers we will get. So initially, it was expected 4% in January, when the Federal Bank of Atlanta has made the forecast, and they have suggested that it should be around 4%. A month later, they have changed their opinion to 1.8%, so the cut forecast twice. Now they expect 2 even percent. So it's really some uncertainty stands around this level, around these numbers. And actually, guys, on the background, on the rising United States yields and inflation anticipation, this really could become very important. What data we will get. By preparation to this data release, markets could take some defensive position, so maybe some retracement will happen here. At least currently we see some signs, and that probably will be the stage that we have discussed. It's possible retracement before second leg to the upside. That's what we are talking about in our weekly research. Now we'll take a look at on the 4-hour time frame chart. You can see that this rally up is really strong. Here we probably could talk even about the Napoli double repo sale pattern that now stands in place. As you can see, the thrusting up, close below the 3x3, close above, close below again. This confirmation of the double repo sale by the Napoli. From the classical point of view, this construction could take the shape the head and shoulders. This could really later lead market to some retracement. Most probable target of this retracement, guys, I don't know, of course, what effect will be from the gross domestic product release, but by pure technical issue, this probably will be somewhere 27.30, 27.50. It's confidence support. Also, take a look, it stands around the previous lows of the previous consolidation. You can see this probably will be most reasonable target. Of course, it's also will be probably target of the possible head and shoulders, if of course it will be formed. Countdowns that point of the breakouts, approximately where it could be after the shoulder will be formed. Breakout, yes, it points approximately in this area. So if you are thinking about taking the long position, you of course should keep an eye on the fundamental data, fundamental statistics, but from the technical point of view, it seems that this level that you could keep an eye on, where you make your decision on the possible taking the long positions, 127.30, 127.55. So let's see what results we will get today and tomorrow.